In this video, traders, I'm going to look at why you have to be careful being a perma-bear or perma-bull. Stay tuned. Hey guys, warm welcome to you. Thank you so much for joining me. All right, so quick video this one, but I want to just touch on this because I keep seeing this a lot from traders who are permanently bearish. That's perma-bear or permanently bullish. Now the issue you have, there's a fine line here, and this is the kind of the point of the video, guys, is that there's a fine line between having a conviction and a bias with your trading. Because you need to have conviction because, hey, if you're in a trade, let's say you're in a swing trade, you're looking for, you know, four-day move, 8-day move, whatever it may be, the market starts to run in your direction. If it's pulling back a little bit, if you're nervous, you don't have conviction in the trade or a firm bias in the trade of reason for taking a trade, that little wobble will have you out, and you'll never ever make what you need to be making to undo the losers, because you know the little wobble will have you out, and so on. So you have to have conviction. You have to have the conviction when you're in the trade to stick with the trade. However, the problem you have is if you've got so much conviction and you're permanently bearish or permanently bullish, you're not seeing the actual evidence in front of you. So look at the difference between the perma-bull and the bullish trader who is looking at evidence objectively but with conviction. So the perma-bull just says, I'm always buying. The market will never go down. It's strong, it's strong, it's strong. So when the market goes lower, what do? Well, number one, the others say, well, this is a bargain, I'm buying. And they don't have consideration for what it is, or they just think the market's stupid, this is wrong, or they get confused. Now the bull who is in a trade or is thinking of buying a trade and have got a bullish bias and conviction looks at the pullback differently. She looks at the pullback and says, you know what, the market's pulling back, so let me see, is this just a natural turn of events? Because guys, the markets may well be bullish for many, many years or bearish for many years, but we know they have cycles higher, they have trends, they have pullbacks, they have consolidations. There's always going to be some kind of two-way flow. You know, sometimes it seems like sometimes it just goes up and up and up and up, or down, down, down if you're in a permanent environment that's like that. But the guy with conviction, you know, is looking at it and saying, okay, well, I have conviction. Let me see what's happening on this pullback. Are we finding some support here? Are we finding a quick snap back to highs? Are we this? Are we that? And or they're saying, hey, you know what? This looks pretty weak. I'm still bullish, but hey, what's 2 days of selling in the midst of my thesis of whatever the thesis may be? So you're looking at things completely differently. And the problem you have is that, you know, when you're really, really permanently bullish or bearish on something, you don't see the slight moves against the market for what they truly are, and you can't capitalize on them because you're so blinded about being right and right and right, and the ego gets involved, and I'm permanently bullish in this. You don't see that, hey, that's been pulling back now. I need to wait one more day just to see if we get a little bit of a flush or a consolidation or some support before I now buy. Because I've got a bullish thesis, but I also recognize it could be wrong. Also recognize that, hey, it's not always going to go in a straight line. So let me just look at this for what it is, objectively. The same thing with the Perma-bears, guys. And a great example recently was Tesla. We've had the same with many other stocks where people may have a thesis and they may well be right. They may well be right in saying that Tesla is valued at $100, whatever. The market is valued at 10,000 Dow. They may well be right. However, as traders and investors, to be fair, we're not paid for being right. We are paid, specifically traders anyway, we are paid for buying at one price and selling at another. It is irrelevant whether you're right or wrong, because the market can do anything it wants in the meantime. If you're there and you're saying, oh, I think it's overvalued at this point, well, you might be right. And you know, in a year, it could be here, and that might be a great trade. But what are you gonna do if this thing goes up to here in the meantime? You're going to lose money. You're going to wipe out. You can't possibly make money unless you've got huge deep pockets. But even if you have, you've not made enough really, because you've had to sit through that drawdown. So the problem is, if you're permanently bearish or permanently bullish on something, it clouds your judgment. One of the reasons why I try to stay away from swing trading stuff that I'm day trading, not that I'm ever a perma-bear or perma-bull, but I might have a bias of, hey, you know, this is an uptrend in this market. It looks like a great stock to hold for, you know, a couple of days, a couple of weeks, you know, I won't want to trade that because I want to have the conviction in my mind to hold it on any pullback, on any kind of little bit of a wobble or a hold or a flag or whatever. Like, okay, it's still looking fine, I'm looking objectively, but if I then day trading it, I might then have to go, oh, it looks like a great short, and that's clouding my judgment with the swing, etc. So that's just a personal thing of how I try to not do that. But back to the point of Perma-bear, Perma-bull. Conviction is great. You need conviction to hold the trade through the little bit of painful parts, through the little wobbles, all this stuff, and we need to build that and learn on improving that, but also objectively. So objectively looking at something and saying, hey, this is normal, natural part of the uptrend, or this isn't looking so great. Whereas if we're permanently bearish or bullish, it's just blinkers, and it might work for a while. You might work for a while. It might be in a bull market, it might be Perma-bull, buying, but at some point it won't. Look back to the dot-com boom, those Perma-bulls made millions on paper and then gave it all back unless they were lucky enough to come out of the market for some reason. But the irony is they won't, because when they see a pullback, they want to buy more. They're not looking at things objectively. Now, will you miss out on some things if you're not permanently bearish or bullish? Yes, you might. You might miss out on bigger runs. You might miss out on bull markets, bear markets, but you'll make more in the long run by having conviction when the right opportunity presents itself, rather than just being underlying blanket, tarring everything with the same brush. All right, guys, take care. See you next one. Bye-bye.